Bitcoin just hit another milestone that has the entire crypto world talking. While traditional markets struggle, Bitcoin continues to defy expectations. Today we're diving deep into the latest Bitcoin news, predictions, and analysis that could change everything. But first, hit that subscribe button and ring the notification bell. New subscribers get our exclusive Bitcoin analysis guide absolutely free. Join our growing community of over 50,000 crypto enthusiasts who never miss our market insights. Let's start with Bitcoin's current price action, which has been absolutely fascinating this week. Bitcoin is currently trading at $43,500. Trading volume has increased by 30% compared to last month. This puts Bitcoin's market cap at approximately $850 billion. Technical analysis reveals strong support at $42,000. The 50-day moving average continues to act as dynamic support. RSI indicates Bitcoin is neither overbought nor oversold, suggesting room for movement in either direction. Fibonacci retracement suggests the next major resistance at $47,000. As the market digests the recent halving and landmark ETF approvals, the financial world is buzzing. Leading analysts from Wall Street to on-chain specialists are making bold predictions, suggesting we're on the cusp of a significant market shift. Among the more prominent voices is JP Morgan, whose analysts predict Bitcoin could revisit the $55,000 level by year-end. This data-driven forecast is rooted in two powerful catalysts: the relentless wave of institutional adoption, supercharged by new spot Bitcoin ETFs from giants like BlackRock and Fidelity, and an improving landscape for regulatory clarity, giving investors confidence. However, it's crucial to maintain a balanced perspective. Some analysts warn of a potential correction down to the $38,000 support level. This bearish scenario hinges on worsening macroeconomic conditions, like persistent inflation or geopolitical instability. But when you zoom out from the short-term noise and look at the bigger picture, the sentiment shifts dramatically. Long-term forecasts for Bitcoin remain incredibly bullish. The six-figure Bitcoin is a common theme, with prominent figures like Cathie Wood of ARK Invest and major banks like Standard Chartered maintaining their $100,000 target for next year, framing Bitcoin as digital gold. At the heart of these theses is Bitcoin's absolute scarcity. Unlike traditional currencies, there will only ever be 21 million Bitcoin. This scarcity is programmatically tightened by the halving. We've just experienced another one, and historically the 12 to 18 months following this supply shock are periods of significant price appreciation as demand outstrips the reduced new supply. Finally, its adoption curve mirrors the early internet. The data suggests we are still transitioning from early adopters to the early majority. If this trend continues, the network effect could trigger an exponential increase in both users and value, solidifying Bitcoin's place in the global financial system. Regulatory developments continue to shape Bitcoin's future across major economies. The United States is moving toward clearer Bitcoin regulation frameworks. Bitcoin ETF approvals have opened the floodgates for institutional investment. The European Union's markets and crypto assets regulation provides comprehensive framework for Bitcoin trading. These regulations bring legitimacy but also compliance requirements for Bitcoin businesses. Regulatory clarity has boosted institutional confidence in Bitcoin investments. Countries with clear Bitcoin regulations are seeing increased adoption and innovation. Clear taxation frameworks help both individual and institutional Bitcoin holders plan effectively. Corporate Bitcoin adoption is accelerating as major companies add it to their balance sheets. This is a strategic move to use Bitcoin as a treasury reserve asset, hedging against inflation and diversifying from low-yielding cash. Tesla's landmark $1.5 billion Bitcoin purchase sent a powerful market signal. The move by the globally recognized innovator helped solidify the narrative of Bitcoin as digital gold, a modern store of value. MicroStrategy has pioneered an aggressive accumulation strategy, now holding over 200,000 Bitcoin. Their conviction is so strong they've issued debt to finance purchases, becoming a de facto Bitcoin proxy on the stock market. Bitcoin is also making inroads into daily commerce. Payment processors are building infrastructure that allows merchants to accept Bitcoin seamlessly, often with instant conversion to local currency, removing volatility risk for the business. Traditional finance, once skeptical, is now participating. Major institutions like BNY Mellon offer institutional-grade custody and trading, bridging the gap between legacy finance and the new digital economy for their high-value clients. The launch of spot Bitcoin ETFs in the US was a watershed moment, opening the floodgates for institutional capital. Regulated products from giants like BlackRock have seen billions in inflows, demonstrating immense investor demand. Even conservative pension funds are allocating small percentages to Bitcoin for portfolio diversification. Advisors note its asymmetric upside, where a small allocation can significantly boost returns while limiting overall portfolio risk. A crucial sign of a maturing asset is a robust insurance market. Specialized providers now offer policies covering digital asset theft, de-risking the ecosystem and making it safer for large-scale institutional investors. Globally, the picture reveals exponential growth. The number of Bitcoin users is in the hundreds of millions and growing faster than the internet in its early days, showing a truly global network effect across all demographics. Adoption is particularly strong in developing nations. In countries facing high inflation, Bitcoin serves as a lifeline, a stable store of value and a cheaper, faster way to send cross-border remittances than traditional services. Powering this growth in payments is the Lightning Network, a second-layer technology for instant, low-fee transactions. It makes Bitcoin practical for small, everyday purchases, solving a key scalability challenge for its use as a medium of exchange. Bitcoin mining continues evolving with more efficient operations and sustainable energy sources. New generation ASIC miners deliver unprecedented hash rates while reducing energy consumption. Bitcoin's hash rate reached new all-time highs, making the network more secure than ever. Over 60% of Bitcoin mining now uses renewable energy sources. Mining profitability remains strong despite increased competition and difficulty adjustments. Bitcoin's difficulty adjustment ensures consistent block times regardless of mining participation. Mining pool distribution shows healthy decentralization with no single entity controlling majority hash rate. Market sentiment analysis reveals interesting patterns in Bitcoin investor behavior. Whale wallets continue accumulating Bitcoin, with large addresses adding significant holdings. Retail investors are dollar-cost averaging into Bitcoin despite short-term volatility. Bitcoin's correlation with traditional markets has decreased, reinforcing its digital gold narrative. Looking at the technicals, the Bollinger Bands on Bitcoin's price chart are in a tight squeeze. This classic indicator suggests a period of low volatility is ending, often preceding a significant explosive price movement. On-chain metrics show strong network fundamentals. Key indicators like active addresses and transaction counts are steadily increasing, demonstrating growing real-world usage and a healthy, resilient network that continues to attract new users. Long-term holders continue accumulating, a sign of deep conviction. With 90% of Bitcoin unmoved for over 6 months, this hodler behavior creates a supply shock dynamic, reducing the available float on exchanges. This is reinforced by exchange outflows exceeding inflows. This trend indicates investors prefer self-custody over exchange storage, reducing immediate selling pressure, and reflecting a maturing understanding of asset sovereignty. Bitcoin's Lightning Network continues its rapid expansion. This Layer 2 solution enables instant, low-cost micropayments globally, proving its viability for everyday commerce and fostering a new wave of payment applications. Beyond payments, Layer 2 solutions are bringing smart contract functionality to Bitcoin. This allows for complex applications like DeFi and NFTs to be built on Bitcoin's secure base without compromising its core principles. The recent Taproot upgrade significantly enhances Bitcoin's privacy and efficiency. It enables more complex transaction types while making them appear standard, lowering fees and expanding the network's capabilities for future development. Looking to the distant future, developers are already working on quantum-resistant security measures. This proactive approach ensures Bitcoin's cryptographic security will be prepared to withstand the threat of next-generation computing technologies. As an investment, many financial advisors now recommend a small 1 to 5% Bitcoin allocation. Its low correlation to traditional assets offers powerful diversification benefits and asymmetric upside potential for balanced portfolios. For most investors, dollar-cost averaging remains the most effective strategy. This disciplined approach of making regular, fixed investments smooths out volatility and removes the temptation to time the market, promoting steady accumulation. Finally, proper risk management is essential. Using tools like stop losses and only investing what one can afford to lose helps investors navigate Bitcoin's volatility successfully, protecting capital while aiming for long-term growth. To summarize, Bitcoin shows strong technical fundamentals, positive regulatory developments, and growing institutional adoption. Price targets range from 55,000 short-term to 100,000 long-term. Mainstream adoption accelerates with better infrastructure and regulatory clarity. Dollar cost averaging with proper risk management remains the optimal approach for most investors. If you found this analysis valuable, smash that subscribe button for daily crypto insights. Next week we're analyzing Ethereum's upcoming developments and their impact on the entire crypto market. Share your Bitcoin predictions in the comments below and don't forget to like this video. Thanks for watching, and remember, always do your own research before making investment decisions.